Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, May 15th. S&P 500 currently sitting at 74.35. I'm David Zarling. I'm here with compadre Ian McMillan. Let's record this thing.
Yes, we have to.
Let's do it. Give the people
Contractually obligated.
Give the people what they want.
It definitely feels like a spot in the market where there's not a ton to talk about, or maybe it's just because everyone's kind of focused on one area, which is fair. And we've got two sectors above a relative 200-day versus the S&P.
Yeah, which two sectors?
Tech and energy.
Tech and energy above a relative 200-day versus S&P.
Obviously, only one of those has been strong for the last few weeks. Could go back. I mean, energy is up today, so maybe a reaction there. We'll see.
Semiconductors, which is what you're alluding to, I believe, is what you're talking about, would be the second largest
thing to talk about.
Yeah, it's the second largest. If it was a sector, it'd be the second largest sector in the S&P. And I get it. I mean, it's what's carried the water for the last 5-6 weeks. It's been semiconductors or bust. What do you think about that? I mean, it's not like other things aren't participating, but as far as alpha opportunity, being able to generate something that outpaces a benchmark, it's really been semiconductors.
Yeah, and I think it's tough, right? Because then you want to compare. Everything looks terrible against semiconductors.
Right. Well, and so much so, I mean.
What else would you say could you own right now? I guess emerging markets.
Emerging markets, but again, that's, I believe, 25% semiconductors.
Yeah, kind of the same thing going on there now. Emerging markets are fine. They kind of stalled here. Didn't quite get the relative breakout. Stuck below 66 an absolute basis. I mean, they're working. Of course, they got hit today. Back to your point, Korea. Samsung and SK.
Yeah, you're on it. So if you take EM as a representation of emerging markets, I think that's fair. You got Taiwan Semiconductors at 13%, almost 14% weighting. Samsung, 7%, and SK Hynix, almost 6%.
People say it's not a fair representation. Then create your own MSCI and have the influence, right, and then create an ETF with billions of dollars in it. And then we can have an argument about what emerging markets is.
Right.
But this is what they be right now.
You can only handle the cards that you've been dealt.
What about MAGs? What about the MAG 7? They've made, like, we got Apple. Apple has had.
I'm impressed by its strength.
Should we be owning Apple? Here's the relative chart. Could you imagine if we went on another multi-year run in Apple? I mean,
is that so crazy to say, considering it's been consolidating on a relative basis for 4 years?
Now, this is. I wonder what would the story be? I mean,
let's make up a good story.
2012 to 2019, it went sideways on a relative basis.
Is the story?
There's going to be something about Apple.
Could they come out with something, or is it they weren't overly leveraged to AI?
And that very well could be it. They're doing their own. I'm sure people that read, like, what's that big tech magazine? TechCrunch.
TechCrunch.
I'm sure, like, those type of people could be able to tell us.
Yeah.
The supply and demand is saying that Apple is very intriguing here, a lot more so than a Microsoft. And maybe it's the same story with Google. Google still looks fine.
Going back to your question about mags, I mean, new all-time highs. Started last week, continues this week on a relative basis to the S&P, trying to get above a relative 200-day. I mean, this is a pretty important level, I will say, for if you're using MAGS versus S&P.
Yeah, to hold like 69.
Yep, to hold that and move higher. But Apple, on an absolute basis, new all-time highs. It's been consolidating for 4 years on a relative basis. Pretty large component. Is it an AI story, or is it balance sheet story? Is it product story? I don't know. Don't care. I mean, I get it. It makes it more fun when you're. Hey, my friends never like it when I say, well, demand's just outpacing supply. I get that. That's not fun. but it's the fact.
Yeah, I don't like that. I don't stock tips. Do you do stock tips? I don't do.
No, because there's so much.
I just tell
There's
people.
so much context behind that. Like,
Yeah, and also, I mean, what if I decide to sell it in 3
right.
days?
And what's your time frame? Are you trying to be a day trader? Or are you trying to like, what's the thing that's going to make me money in a month? Are you more of a long-term investor? Or what are we talking about here? And then for those who don't use relative strength or ratio analysis, that's a whole nother level. The blank stares you get from a newbie to ratio and relative strength. It's a secret sauce in my opinion. Like, just to be able to use math to compare one thing versus another, get an idea of what's outpacing another thing, honestly, has been what's allowed us to have a manly position in semiconductors. And maybe that changes. Maybe today was the beginning of rotation out of semiconductors and into other things. But NVIDIA just went out to new all-time highs. Down today.
I know. Yeah, it's hard to say that like semiconductors are over. And could they take a break? Would probably be the best route.
A nice consolidation.
Go sideways.
Yeah, sideways is always easier than something like what silver did, where it just corrected hard. Sideways would be better.
Okay. I don't know how we had to bring that up. Can correct hard. Yeah, I don't know. Like, okay, what do you think about software? I don't know. Software is kind of intriguing. I don't say that as like a value investor. I just say that as like, I wonder if we're just going to find out that AI is not going to replace a lot of the software.
Did you see the cover of the most recent Economist?
Oh gosh, what was it?
Like, basically, big red cover. There's a hole that people are falling into, and the headline is "The Jobs Apocalypse. Hope for the best, plan for the worst." And I think this is alluding to AI is coming for all the jobs. There's a lot of anxiety out there about AI and data centers, and it's just interesting.
Oh yeah, I see that.
What's interesting is I did see a chart out there that job openings for software coding is on the rise. Counterintuitive.
Well, and that was a big thing, right? That like a lot of those kids couldn't get jobs out of college, right? And I know what the arguments are around why. I'm very aware of them. Probably a lot of truth to that type of stuff. But no, that's good. It'll be interesting to see this, if there's like reversion, right? Well, I mean, the semiconductors, I assume they get hit. I don't know. See, it's impossible to guess like the story.
Right. That's why I use price.
That's why you got to use.
Like, anybody can make up.
I guess I wouldn't be shocked to see some type of reversion to the mean, even if like longer term AI replaces some software. But yeah, maybe we're done. I don't know.
Ian, are you ready for me to spit some history regarding tech and fear? You ready?
Yeah.
All right. Printing press, 16th century. Headlines from the time.
Perfect example. Look how many people have lost their jobs.
Viewed as a threat because of information overload. And it'll be just a confusing and harmful amount of books available. Electricity.
So many
electricity.
People could start
19th century.
Stores. Yeah. Uh-huh.
People are going to be shocked to death by electric doorbells. Telephones, 20th century. Described as an instrument of the devil, and some feared it would induce deafness. The radio, 1920s.
Can't be scared of a radio.
Radios were intruders, damaging children's minds.
Okay.
Computers, 1950s. Dubbed giant brains, mechanical monsters that would inevitably destroy jobs and take over human reasoning. Televisions and video cassettes. Oh, Blockbuster. You need to ban them. They were damaging us. Even like automobiles, back when those were coming out. If you went faster than what a horse could go, you might die. Don't we have the same feeling now? Isn't that the same sentiment now, that AI is just going to destroy everything? Yeah. Jobs are gone.
Too much, too quickly.
No one's going to think for themselves. Nothing new under the sun, man. People are afraid.
Probably like a lot of things, just a couple decades of fine-tuning.
Oh, yeah. I mean, even the internet.
Right. I mean, I think we all understand like the AI hallucinations. We've all seen that stuff.
I think some of this stuff is real. Like, like data center decibel noises around the neighborhoods that they exist, the water that they use. I'm not here to be like a AI ambassador and someone who is saying like there's not secondary issues. There are. But as humans, over and over and over again, we tend to be scared of change and new things. I think AI is matching that again.
Probably. I remember Y2K.
Y2K. I remember it as well. The world was supposed to end.
Yeah, computers weren't going to be able to handle flipping to a new millennium. They were just built to exist up to 1999.
And then everything was going to go crazy.
Yeah, I mean, looking back on that, doesn't it make you feel like, oh, we're so dumb? And I say we strongly. Yeah, we do get worked up over some stuff when you put it in that context.
Well, I get it. Like, okay, near where I live in Wisconsin, Grafton is a city nearby. Their main industry was vinyl records. So when CDs came out, pandemonium. People are going to lose their jobs. That's true. But new jobs were created. And I think what's hard for people to see is like the other side of, well, if AI is taking jobs, what jobs are going to be created? And that's always been the case.
Yeah, that's always the murky part.
That's always the murky part. I remember, so I'm an exennial, started in the workforce in an era where email was coming online. That was normal for me, but also memos. You sent a memo, a letter, or something internal.
And that was sent via email or fax?
No,
what?
A memo was literally in an envelope, inter-office mail. It got delivered to you.
Oh, so you had like a guy that came around with the cart and delivered mail?
And you'd have a memo.
Oh my God, I want that back so bad.
And you'd have a memo.
I mean, I should get my wife to start delivering my mail downstairs.
Back then, CNN had an article about how email was hurting IQ more than pot. I just think it's a constant feature of human beings.
But see, like when you're in the moment, you're like, okay, I mean, I guess maybe.
Well, yeah, if you're the memo maker, if you're the guy or gal who's like, these kids and their email, electronic mail, that's crazy. Like there's no touch, there's no art to that. And so I get it. I'm not here to say that AI is free and clear and there's not dangers to it. Definitely some thought discussions that need to happen around it. But man, for something that's been carrying the market higher here for a while, there sure is a lot of ticked off people about it. I would call that skepticism.
And there's definitely a lot of skepticism. I think there's skepticism around like right where it's still like who are the actual like ultimate winners going to be? Maybe that is semiconductors. Maybe it's pretty simple. How quickly does that get priced in? The internet was amazing, and we priced a lot of that in by the year 2000, March 2000.
Yeah, it's called a pull forward, right? Like an over amplification of capability where there's a mania behind it. It does prove itself a worthwhile technology over time, but the real winners don't show themselves, like an Amazon doesn't show themselves until later as being the one. And we got IPOs coming up. I know Anthropic's going to be IPOing. I believe OpenAI. These are coming. Does that matter? I will say that there are bubble type characteristics like Allbirds saying they're an AI company now.
Yeah.
You have these IPOs coming. There's definitely characteristics here.
Yeah, I agree with that. But then part of me is kind of like, there's stupid stuff that happens along the way all the time. And then you look back and you're like, oh, it wasn't a bubble. It was just some stupid private equity company trying to, or how long does it take? Like, how long was it like Riot blockchain?
Right.
Well, it worked. It worked until market participants decided it was dumb.
Well, I still think if you're under allocated to semiconductors, it goes back to the old adage, are you in cash because it's a bubble, or is it a bubble because you're in cash? Those are two very different things. Like, I'm not participating in this, it's got to be a bubble. Or I know for sure this is a bubble, so I'm stepping aside. Those are two very different things. And I don't think you get to say at this point that it's time to step aside, with the caveat that I'm always willing that we're recording the top in semiconductors right now.
Yeah, this is it. It could be. But it could have been 2 weeks ago. We did have a bit of a shock on Tuesday. Recovered that, went all the way back up to new highs, previous highs, some of these ETFs.
Well, it's really hard. Okay, so NVIDIA the largest semiconductor stock, underperforming semiconductors as a whole. So you've had this whole move happening in some ways to say without NVIDIA having the alpha, being the alpha. Do we see a rotation from the rest of semiconductors into NVIDIA, Taiwan Semiconductors, Broadcom? Could be. Because it's really been broadly based. This isn't like when we talk about the semiconductor move that we've seen the last 5 or 6 weeks, we're not saying, oh yeah, it's NVIDIA, TSM, Broadcom. Nope. It's across the board, widespread. If you're a semiconductor company, stock, you're getting bought with these big boys underperforming. So it's a little bit like watching the Braves do really well without Acuna, or the Dodgers do really well without Ohtani. And then all of a sudden Ohtani gets hot and you're like, oh man, now what? Something to consider.
Something to consider.
Throw it out in the universe. And right now, I mean, in fairness, the Magnificent Seven, and then if you add in Broadcom, Micron, and AMD, that's 40% of the market. 1881, railroads were 63% of U.S. stocks. Could it go higher? I guess it could. What do you think about breadth? Like participation?
I mean, it could definitely be better.
Oh, is it easier when everything's participating, right?
Yeah. I mean, the people that say it's a narrowish market. I mean, I think probably everyone listening to this say, well, yeah, thank you, Captain Obvious.
Well, yeah, you got a NYSE bullish percent in O's.
Yeah, back in O's, but still above 50, right?
Still in midfield.
I mean, S&P advanced decline never made any. I mean, it's actually been going down for.
You definitely have divergence on the advanced decline lines.
It's been going down since about April 20th.
And we've never had this before, that this week when the S&P was making new highs, we had 9% of the S&P making new 52-week lows. That's never happened before.
Yeah, I've seen some 9%.
Yes. The breadth is abysmal. And so is that the warning flag? Is that the, and I guess I'm going to throw consumer discretionary versus consumer staples in there, that ratio. Like, if this is it, I don't think we get to be surprised, is my point. Like, if we just marked a near-term top and we're correcting into July or into November or something like that, it's not like there weren't signs. Bullish percent in O's, 9% S&P making new 52-week lows while the S&P is making a new high. Financials versus S&P all-time relative lows, all-time. Consumer discretionary versus consumer staples, very weak. Triple C credit spreads, a measure of liquidity, rising. So those would be definitely dents, major dents into a bullish thesis going forward. However, markets can stay doing what they're doing longer than most people think. They could stay irrational longer than we could stay rational. It's the way it is. I think you asked me about software and I didn't even answer that question.
I think you did.
I just know that it's interesting that on a tape like today, a red tape, broadly speaking, software holding up okay.
Software, cloud computing, cybersecurity, Qatar. Qatar. However you say it. How do you say it?
I say Qatar, but I believe it's Qatar.
I say Qatar too, but yeah. I'm just a dumb, stupid Southerner.
Pecan pie?
Yeah, I say pecan.
We haven't talked much international. I know you brought up emerging markets. We pivoted that to semiconductor because of the weighting there. Anything worth covering there?
Where all these conversations tend to go now. Well, semiconductors. I mean, Brazil, fortunately, might be losing a rate of trend. Depends on where you want to draw your lines, but still in an uptrend. The evidence continues to build that maybe we're, I wouldn't say packing up our bags, but maybe just hanging out in like the mid lane for a little bit.
You're saying we've had an outsized move in something like semiconductors. It's helped the broad market. if that pauses and we don't get rotation, because that's the thing. Rotation is sitting there waiting to happen. It doesn't have to happen. It's a matter of, was semiconductors the exhaustive move to the upside and now everything's going to correct together because it's such narrow breadth? Or are we about to see massive rotation, semiconductors pause while everything else moves higher? Or semiconductors just keep going and everything stays narrow? I mean, those are the three options, really.
I guess so, yeah. What do you think about rates?
Rates. Haven't talked about that in a while, but I will say,
they've been in a range for
20-year treasuries,
3.5.
20-year treasury bond against levels that have been tested before. Back in 23, back in summer of 25, we're back there again.
Yeah, it'd be the highest weekly close.
I suppose, are you looking at TYX? Yeah.
TYX.
Are we about to see rate? And that's so funny because previously futures markets sitting here saying that they're going to cut rates. Well, sure looks like the bond market's going to force them to raise rates. I think we're seeing matching price reaction out of home builders and home construction, which are just abysmal, sadly. You brought up transportation before we hopped on here. What are we seeing there?
Nothing really. I thought there'd be some more follow through. Trucking had a good day yesterday. I mean, holding up on an absolute basis. Look like an IYT. If you're not tech and more specifically semiconductors, there's not a lot of pretty looking relative charts out there.
I think financials versus S&P and consumer discretionary were staple. A perfect example of that.
Financials, an absolute dog.
Can't get above a absolute 200-day, negative on the year.
Yeah, what's up with that?
So there's warning signs. Like if we get a correction now through,
it's not working, man.
Say it again.
Nah, JP Morgan, it's not working. Right. What about like our Caterpillars and Cummins? We'll see.
Caterpillar holding up all right.
Is that okay? We'll diverge you.
And I mean, XLI versus S&P, not great. Back below relative 200-day, back in a range.
Static, man.
So we'll see. Definitely warning signs out there. It's been the semiconductor show or nothing.
Yeah, how disappointing for industrials. Thought we were going to do something there.
I guess I should throw some aerospace in there. It's been okay.
Yeah, but didn't Rocket Lab kind of have a failed breakout? I might be wrong on that. No, I guess it stuck it, didn't it? I guess it's okay. Yeah.
Rocket Lab, Planet Labs doing okay. Yeah. So I would say that's another area. A little more niche, but held up well.
If you're a CEO with a struggling stock, would you just add labs at the end of your name?
Allbird Labs.
Allbird Labs, Salesforce Labs.
Microsoft Labs. Microsoft AI. You know that's coming. We'll see. So it looks like rates are rising.
Rates are rising. Stocks are stagnant, other than semiconductors. And
frankly, if we close the week like this on S&P 500, that's a really noticeable upper shadow that I can't recall ever being the case on a weekly basis. I mean, it's pretty large.
S&P.
So we'll see.
Yeah?
Well, I figure I should highlight the support of this podcast, the Adaptive Select ETF, listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large-cap stocks when the market is an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. Any other place you'd like to take us that you want to highlight for our listeners before we ask them to give us a high ranking?
Don't, man. It's sad. It's like we have a baseball podcast, but only one of the 32 teams has a winning record. Yeah. So, which I understand would be mathematically impossible, but it's what it feels like. So what are we supposed to talk about? about the Dodgers again.
Right.
Blech. But yeah, I mean, hey, it is what it is. It's the hand that's been dealt. Don't know when it ends. A few cracks out there. Like Dave said, rates look to be going higher. That's kind of always been our mantra with clients.
Well, and shoot, Ian, I think you bring up a great point there. I mean, I'm not saying early, but how on point we've been saying the last 5 years that this is a new 40-year cycle in rising rates.
And even through this consolidation, I can go back to countless monthly letters that were sent out. We always touch on rates. People care about interest rates. It's obviously a big deal. But always with kind of the underlying message that this is likely going to go higher. I don't know if we get 13%. Like, people want to know, oh, is this like 1980 bad? I have no clue. I'm not telling you what peak mortgage rates are going to be, but
and
the price is price, right?
Price. And a new cycle that began in 2020 of rising rates is here, and we get further confirmation, and it looks like we're going to get more confirmation from that. I don't mean to be a harbinger of bad news, but that's just the reality, that they could be hiking rates. I know everybody's talking about the new Fed chair. Well, he's probably going to be raising rates. Is it because he wants to or because he has to?
Doesn't matter. Doesn't matter. At the end of the day, no. If mortgage rates go up 200 basis points, they go up.
They go up. Well, Ian, appreciate you doing this episode 299.
299, wow. We doing anything special next week?
Can't wait for episode 300. I hope people tune in. It's going to be awesome. It's going to be amazing. Always appreciate you doing this with me, Ian. For those listening, we appreciate you guys tuning in. Don't worry. Podcasts and radio won't rot your brain. It's going to be okay. And we ask you to share this with your friends and give us a high ranking of your choice. Thanks for listening.
Have a great weekend, everyone.